watching the India Development Debate, and I'm Tamanna Inamdar. Today we're talking markets on a day when Indian markets have had a pummeling. They've plunged following the world's fears of a coronavirus spread. The Sensex lost over 1,400 points today, and this in fact has been the worst week in over a decade. In all, Indian investors lost 11 lakh crore rupees just this week. The fear of coronavirus has gripped markets so hard that Asia's richest man, Mukesh Ambani, lost about $5 billion on a year-to-date basis. India's VIX saw its biggest intraday spike in 2 years, going up 33%. Meanwhile, global fears continue, with the Dow opening about 700 points down as number of cases reported increase around the world. And now to get a sense of what really is going on in this market, why the panic button seems to have been pressed, I'm joined now by Nikunj Dalmia, Managing Editor, ET Now. Nikunj, did the coronavirus bug reach the Indian markets now, delayed?
You know, I'm actually surprised that the panic button has been pressed, and it has been pressed so late, because world discovered coronavirus. Of course, the lethal impact was discovered slightly late in early Jan. Markets are reacting to this in late February. So the question you would ask yourself is that what has changed in the last 4 or 5 days, and what explains this kind of a gut-wrenching fall? What was bad has become horrible, and what was horrible has become terrible. My sense, Tamanna, is that this is an event-based sell-off. Markets were ripe for a correction. US markets had reached what could be called as an obese and Humpty Dumpty level. From there, it was getting difficult perhaps for bulls to keep on adding more and more value. We've seen a gangbuster rally in 2018, a great start for US markets in 2019. For those who thought that coronavirus will not spread beyond the borders of China, I guess they've been shocked and they've been surprised. I don't think financial markets really know why they've sold off today. It's one of those days when you would say prices have gone down and reasons are following. So where do we go from here?
Yeah.
I think that's the question. And I think nobody has a clear answer. The way to approach this kind of an event is that you must understand that when there is an event-based sell-off, it's going to dislocate prices. And when prices they get dislocated, they can get dislocated for a long, long time. So if you are imagine a car running on a highway, you suddenly hit a speed breaker. You're not going to be running again. It will take some time. Repair will have to, your repair damage has to be done. And then by the time you figure out your rhythm, it would be some time. So I think we've got crunched. You may see a little bit of recovery from the oversold zone, but I don't think we are in for a very smooth sailing for some more, for a pretty long time now.
You know, I'm just jogging back to the last big global financial sort of crisis, 2008, and what the commentary was at that time for India, which is we're petrified with what's happening in the world, but the underlying factors for India are very, very strong. Is it less positive this time round? Because even though the markets have been resistant to it, but in terms of growth, consumption, corporate results, all of those numbers have not pointed to very positive direction. So do we have those mitigating factors right now domestically?
So Tamanna, yes and no both. Look, we've got hit because of a slowdown when last year world was doing okay. So in a sense, this time around when the slowdown will happen, India will, in absolute terms, India will not get that much impacted because your GDP will trough out, your auto sales have troughed out, liquidity is back in the system, crude is down. And I don't think there is a problem of leverage, at least in Indian financial markets or global financial markets. So the big factors which always drag the global economy down, I don't think those factors are at play. But the growth will get recalibrated. I think the assumptions, when they get challenged, see, when you in financial markets, you always work with an assumption. When assumptions change, and when the assumption upside kicks in, markets go higher. When the assumptions are dismissed on the lower side, when numbers are crunched down, markets go lower. So I guess it's all about assumption. What happens in the short term, I think it's a function of liquidity. It's a function of risk off. I don't think one should buy the fall. But if you frankly ask me that in next couple of days, will this market give you good entry points? It will. Because bear in mind that what is happening in the world this time may not happen in India. And in this kind of a decline, when crude and interest rates both have come down, you will actually get a sense of some of the some great businesses which will be available cheap now.
Well, it's the challenge then is to make the right picks and choices. Thanks so much, Nikunj, for joining us. So can Indian markets recover from the coronavirus fear next week, considering US markets have been hit Friday evening as well? The Dow, in fact, opening nearly 800 points down. A lot of volatility seen in the Friday session in US markets. So those fears still continue. What can we now hope and expect through the next week? Speaking to me now on this are Nilesh Shah, MD of Kotak AMC, and Ajay Srivastava, CEO of Dimensions Corporate Finance Services. Welcome to both of you, and thank you for speaking with me on the India development debate. Mr. Shah, let me begin with your take, and I've been asking this question. Coronavirus has been around for nearly a month now. The Indian market seemed Teflon coated all of this time. Slowdown, no problem. Bad GDP numbers, no problem. Corporate results, dismal, low consumption, no issues. But now suddenly, with only 3 cases reported so far in India of the coronavirus, these fears have cropped up. What is your take?
So if we see the market, there were 2 parts in the market. One, large cap stocks, second, small and mid cap stocks. While the large caps continued to run ahead on passive flows and other factors, the small and mid cap did bear the brunt of slowing economy. From Jan 18 level, there were 15 large cap stocks which were up 39% few weeks back, whereas the mid cap and small caps were down between 13 to 30%. They were as low as 40% some time back. They recovered a little bit in Jan, but now, the correction has occurred. So to some extent, the market is divided between large cap and small and mid cap. And the correction which we are today seeing in Sensex, a large cap, is more than what we are seeing in small and mid cap. So somewhere higher expensive valuations were looking for a catalyst to come down, and coronavirus provided that catalyst.
Ajay Srivastava, is coronavirus just a catalyst, and then why the trigger now? What is your reading?
Well, the trigger is very simple, Tamanna, that the whole market, not only India, particularly the US market, was built upon free money available in aplenty. Zero cost money available aplenty to equity traders is like, is intoxicating. And that intoxication was running the global market, including the Indian markets, where the FI flows remained, if not so very buoyant in the last 3 months, but at least strong, no withdrawals. This is what happens when leverage players get out of the market. What US is seeing is really huge amount of leverage players getting off of the market. They were doing yen trades, euro trades. All those trades are being unwound as we speak in the last 3-4 days. And I would believe that it's now coming to the point where most of the larger of these trades have been wound up, and you would see US market to stabilize. Same thing happened in India. The FIs sold because that's where globally they are selling. There were leverage positions all over the world. They have been selling. And as I think Nilesh rightly said, the Indian investor held firm. If you look at most of the stocks in India, they have corrected, very, very marginally, even after the lofty valuations. If you look at a Nestle of the world, or a PVR of the world, or an AstraZeneca Pharma, or an Abbott Lab, you see the correction is minuscule. Even in one of the rare PSUs, IRCTC correction could be 5 or 10%, but that's after riding almost 100% in the last 2 months or so. So I think coronavirus is a trigger. It's important to understand it can derail all the economies, but the real thing happened was that the leverage positions got unwound and got killed on the margin side, and that's what perils you pay when you have easy money floating around. Sooner or later, some event comes and triggers. So I think that event should play out in a matter of a day or 2, and then we should start dealing to a little bit normalcy in the markets.
No, but that's my question, Ajay. Everyone's been referring to coronavirus as an event. An event cannot last for so long. Coronavirus has been around for a month. Its seriousness has increased, of course, in the last few days, when the WHO said there were more cases now outside China than in China. And global markets are responding accordingly. We don't really know how far it's going to go, isn't it?
Well, the issue is not only how far, how far it can go. The issue is how will it be tackled? You know, imagine, we are all talking very nicely because India still has been out of the brunt of it. Imagine if it hit somewhere in Mumbai or Calcutta or Delhi and so on. You know our infrastructure, you know our preparedness. We have not got it act together even after 30 days. We don't have a task force of the kind. We have handled well the few hundred people who came from China. But on a mass scale, is a country like India, for instance, able to handle such an epidemic? And that's what driving, including the United States, you know, can we handle such a pandemic if it occurs at this point of time? And that's what's driving everybody out that, listen, if this is the way it's going to go, then the last bastion was US and the economy of the US. If that crumbles, there's nothing left. Euro anyway, European economies have got very 1% or anemic growth rate. India was at 4.5. And if global meltdown happens, then India will also suffer along with that. We have one tailwind, which is good for us, is the oil prices, historical low oil prices, so we do well. So the scare is that if it comes, the derailment of economy would be so humongous and long that is not even imaginable. Now, if you have borrowed money to buy shares, you obviously want to get out and repay the loans, which is why you don't see withdrawals in mutual funds. You see withdrawals and the whole play down in the futures market, even in Indian markets.
Nilesh, what's your take on that? It's the leveraged money which is heading for the exit door right now. And do you think these concerns of a possible, implosion here in India or the arrival of this disease in India at full scale are very, very real at this point?
One, apart from the leverage money, there is also index money which is getting withdrawn. Global emerging market ETFs have certain allocations to India, and those investors, when they are in risk off mood, they put redemptions, and the fund managers does not have a choice but to sell. So apart from leverage, there is passive money which is also being withdrawn. Second, I might be blowing our trumpet, but clearly compared to the rest of the world, we have tackled coronavirus far better. In Kerala, it's visible where 3 patients were reported and they have cured. We brought back our citizens from ships from China. They have been quarantined and most of them have become well. So while we may not have as efficient infrastructure as Western world or China, somehow or other we have managed this coronavirus till now far better. Maybe God is with us, maybe our heat and humidity is helping us, or maybe our systems are actually working. And whether it was Nipah virus, whether it was plague in Surat many decades back, we have managed our contingencies reasonably well despite limited resources.
I like that optimism. There's so many theories going around that it's the Indian heat and improved Indian immunity, since we're so used to a whole host of things around us that, our immunity is better. Well, let's hope that's the case. But it's a long bet, isn't it, Ajay?
Well, I think it's a reasonable bet because the kind of food we eat, and if you eat puchkas on the road, I think any kind of viruses coming out of China can be easily tackled, can't it?
Well, I love it. I love it where, you have market stalwarts talking about, the iron cast Indian stomach. But no, like coming back to what investors should do. At this point, retail investors, institutional investors, all figuring out what to do next. And Ajay, let me take that question to you first. What would be, your take next week onwards? Are you going to get into bargain hunting mode, looking at good bets? Or is this going to be a very wait and watch move?
See, okay. See, we are animals of the market. So, as tempting as the market is, you couldn't leave us out of it. Even today, we have been buying some stocks and, putting the money out from someplace. So, I think at this point of time, yes, there are opportunities abundant. If you look at it, the pricing of 75% of Indian shares is abysmal, absolutely abysmal, and leading the pack. And I'm not sure it's a great thing to buy, but I'm still saying leading the pack is the PSU. The kind of value destruction we've seen in the PSU stocks, they are now quoting at 0.7 times or 0.8 times book value. You look at GAIL, you look at NTPC, you look at IOC, all giving dividends of 5 to 6%. Now, I can't explain the logic, the rationale, why they're priced so poorly, but at the end of the day, they are priced where they are today. So leave aside those 40, 50 MNC stocks. Those are really having a good time in the market. Everything else is priced extremely low. And my guess is that whenever, and it will be a beautiful V-shaped recovery. I can tell you this much, we're very sure of it. Whenever the recovery happens, it won't be a soft trundle, it's going to be a V-shape. And you got to be ready for it, because these kind of events take so much of liquidity out. And when it rushes back, when the risk is on, you'll see this market climbing back. So it was down like this, it'll go up like this. And for that, you need to be prepared in the best quality stocks you got. You got to still get rid of the C quality stocks at this point of time. Now, whether we like it or not, India has a very shortage of good quality stocks, 20, 30 stocks, the top banks, the consumer companies, and so on and so forth. Auto will definitely not be part of the pack at this point of time. And lots of other opportunities. If you look at one stock, I'll talk about it. I hold it, so it's for disclosure. IEX, Indian Energy Exchange, didn't wilt under the pressure at all in spite of all these things. So you have lots of pockets. You have the airport companies, aviation companies with low fuel prices. So, as far as if you take the fear of this out of the system, that it is imminent to come into India and they'll destroy everything, then you see a whole host of opportunities in aviation, airport stocks, consumer names at this point of time. I would still not go with the exhibition
aviation,
names, because they could have a problem.
Would you look at aviation this time?
Small amount of rumor in the market.
Ajay, you're saying aviation at this time when, the tourism sector is hit across the globe?
It doesn't matter. The flights are full. The flights are, if you're traveling around India, you will find the flights are full. Vistara is getting 40,000 bucks for the business class fare, Bombay, Delhi. That's incredible, absolutely. I think aviation is going to be a star, because with the low prices of oil, I think you will see a major this thing, and I'm not sure Air India's sale is about to happen. So there's no new competition coming in. It's these three guys who are going to make the money in the market. So we have bought aviation today. Yes, we have bought.
That's another interesting aspect. What does this uncertainty in the markets do to the entire divestment plan? I'm going to come to that in a bit, but Nilesh, I want to take the same question to you. For investors, including those in mutual funds, which is a large, swath of investors who leave it to their fund managers to take the final call and are right now panicking, thinking, what's happening. What is really your advice to them?
My advice to investor is simple. Please follow the righteous path of disciplined asset allocation. We don't know where the top of the market is, where the bottom of the market is. Today market is getting pummeled because of coronavirus. Tomorrow, who knows, like SARS, Ebola, Zika, this will also come to an end. In 2003, when SARS, which was far more dangerous and causing far more mortality than coronavirus, was at peak, people were as panicky and fearful as today. From that level, Nifty is up about 10 times plus. So we really don't know how the markets will behave in the future. My recommendation to investor is to follow your asset allocation. If valuations are becoming cheaper as it has become today compared to yesterday, it's time to add little bit to your risk. It's time to buy something. The righteous path of asset allocation without looking at the current noise, that's the best way retail investors can make money.
The next week, in fact, Nilesh, how do you look at it? How would you play the markets the next week? Would you wait and watch? And do you have any favorite spaces you have an eye on?
So if you see today itself, there is about 1400 crore sales by FPIs. And the local mutual funds, local institutional investors have brought close to 7,000 crore. So clearly we are trying to catch falling knife as valuations are becoming attractive today than yesterday. My feeling is that there are immediate positives of coronavirus. One, lower oil prices, as Ajay mentioned. Second, there will be disruption from Chinese exports coming into India. there will be some negative effect because some goods we need to import and our supply chain will get disrupted. But there are many things which we were unnecessarily importing from China, and that will be replaced by manufacturing in India. The jobs which we were exporting to China by importing their goods will start generating in India. And the third and the biggest advantage which we could bring to India is if we can convince global manufacturers to move away from China, to diversify their supply base from China into India. I was just reading somewhere that Samsung now contributes 28% of Vietnam's GDP, and they have a $62 billion turnover there. Now Samsung came to India long before they went into Vietnam. Here Samsung is a great company, big company, but probably their turnover is about $10 billion. They contribute under a percentage of India's GDP. We need to give that confidence to Samsung and other global companies that they shift their supply chain from China into India. If we can achieve this, then I think we don't have to worry about growth or coronavirus anymore. So while there are near-term immediate challenges of coronavirus, it's a godsend opportunity in terms of lower oil prices, in terms of reducing trade deficit with China, and in terms of bringing global supply chains away from China into our country.
Ajay, do you see that silver lining as well? And what about the GDP numbers that have come today? Because we've been waiting to milk an opportunity right from when the US-China trade war began.
See, three things. One is the GDP numbers. We may say it's gone up by 0.2%, but very disappointing because to my mind, this was the peak season for the Indian economy, the festive season. If we are 4.7 now, I think we are heading for very, very serious trouble very soon in the next 2 quarters. So GDP, I don't think is going to be a great thing. Lots of point Nilesh said is absolutely correct. The supply chains will come to India and lots of companies are looking. We advise a couple of biotechs. They are seeing a lot of traction coming into India. But Tamanna, I'll tell you the lesson here is what? Lesson is something else apart from economic. The lesson is that when you have authoritarian regimes ruling such kind of economies in the world, look at the havoc they can create by not having freedom of press, freedom of expression, and so on and so forth. This could have been contained long back by Chinese government if they had been open, if the society was open. And I think it's a lesson for the economies that if you don't have open economies, you can export havoc around the world. It's not going to be a local issue, it's going to be a serious issue. And that's true now for the whole world. I think the lesson is the whole world that we need to create a more transparent system, and that goes for all the countries. That's a big lesson from here, just more than economic. But India will, we have survived for a long time. We will keep doing better. And as I keep saying that, as Nilesh said correctly, this too shall pass.
Well, this too shall pass is a hope many have today across the world. Just as an aside, by the way, the coronavirus fear is that bad that popular beer brand Corona has had its shares drop 8%. According to data reported by YouGov, the purchase intent for the beer among adults in the US has plunged to its lowest in 2 years. That's the kind of fear that coronavirus is generating. By association of just having a similar name, a brand has taken a beating. So let's hope everyone recovers from the fear and the virus spread itself is stemmed. On that note, I want to thank Ajay, Srivastava and Nilesh Shah for joining us on the show this evening. We're taking a very short break, but our coronavirus talk isn't over yet, because the fact is it's a huge indicator in everything right now, including bringing about a big question on the GDP numbers. We're taking a very short break. When we come back, I'm talking about GDP data out today. 4.7 for Q3 shows that we are still in a world of pain. Will coronavirus impede our recovery rate? I have a stellar panel on the other side to talk to me about it. Hasib Drabu will be joining us, Arvind Virmani and Siddharth Sanyal of Bandhan Bank. After this very short break, don't go away. We'll be right back.